Charles, thanks for making time, my brother. So, but I'll go straight into to the sustainability report that you guys have just released today. But what stood out for me was that you aim to green 10% of your portfolio by 2025 and about 30% by 2035. What will you say are the key strategic and operational challenges that you face, while you try to rapidly scale, the greening of your portfolio companies?
Thanks, Eric. Thanks for having me. Always a pleasure to have this conversation. You're right. Today, put to the market, our third sustainability and climate report. We've called it that because we've combined two reports into one. Previously, we had a sustainability report and a climate report. Put them together for ease of reference for our stakeholders, but also to begin to meet the requirements of IFRS S1 and S2 standards. Yes, to the question of greening our portfolio. So we are a financial institution. What we do is finance. And so we take quite seriously the responsibility we have to ensure that we are channeling capital to the right places in the economy. I always say that if you want to change something in the economy, the easiest route to use is the financial sector, because the financial sector can reward the behavior you're looking for, and it can also penalize the behavior that you don't want to see. Mm-hmm. And so for us, we've taken it as a priority to ensure that as we talk about sustainability and as we talk about environmental, social, and governance considerations, that as a financial institution, we are putting our money where our mouth is. That we are persuading more and more of our clients to begin to do their businesses sustainably. And as we do that, that we have the right propositions in place, for us to support that journey. So, from the report we put out today, we spoke about 47 billion shillings being in sustainable finance, featuring both inclusive finance as well as green and climate finance. And then you speak about the ambition that we've put out there, mm-hmm. To get to 10% to green our portfolio, 10% of our portfolio, and the long term being about 30% by 2035. Now, first of all, we think we are already around the 10%. And so for us, the big question is how do we utilize the runway between here and the 2035? This will happen in a number of ways. First, we've earmarked specific sectors that we think are priority for us as a country, but also based on the feedback that we're getting from our clients. So you'll see us playing a lot more in renewable energy. You'll see us playing a lot more in driving energy efficiencies. You'll see us driving, a lot more within climate smart agriculture. We've got a number of clients in our agribusiness unit, that are very aware of the challenges that are there from a climate perspective. And even those that are not, we find that it is our responsibility, to keep helping them to do better, to anticipate the risks and to prepare for them. Mm-hmm. Because when our clients do better, then we are doing better. Mm-hmm. And then finally, green buildings. A lot of people own homes. A lot of people are struggling with, with things like power dependency, power costs. What do I do with my waste? And this is an area that we are focused on, both from a developer perspective, but also from an off-taker's perspective. So these are the sectors that we are looking at to help us drive towards that 30%. And you ask, how do we get there? I think the first thing is building the right understanding of what customers are looking for. And this is something we are on a day-to-day basis, on a daily basis engaged in. It's on that basis that we've come to the strategy that I've just described. But it's also in building the propositions, for customers, for them to access this. So just this morning, we launched the ABSA Home Loan, which is a facility that allows you as a homeowner or a potential homeowner to add on a small amount onto your facility that then allows you to make certain infrastructural interventions that can get your home green certified. Starting with energy. So if you want to do solarization, or you want to replace your appliances, with more energy efficient appliances, and so far and so forth. The second one there is around water. So, if you want to put together infrastructure that helps you to harvest better and more water, or you want to replace the piping and faucets in your house so that your usage is more efficient. And then the third one is waste management. How do you utilize your waste to be beneficial? So we've got things like biodigesters, wastewater recycling plants that we can help you to install in your home. So I think it's a number of things. There's understanding your clients, is building the right propositions for them, is backing those propositions with the right credit and risk considerations, and finally is just tracking. Tracking is a really big question, within the broader sustainability space. And so the kind of data you're able to get and how you utilize that data to inform your next steps. So those are going to be critical things that determine our success.
Okay, interesting. Speaking of, you mentioned that you've dispersed about 47 billion, and then and speaking of tracking, like how do you measure the actual on-ground impact, without looking at the financial metric without looking at the financing side of it?
So first, it's in the access to that funding. So depending on which segment you're coming to us from. So as I said, sustainable financing has got two elements. So it's got inclusive finance, and it's got green and climate finance.
Yeah.
So the inclusive one is much simpler, because that's about opening access to previously excluded groups. So if you think about the youth has been greatly disadvantaged from access to credit. If you think about SMEs, and specifically micro SMEs, micro businesses have been disadvantaged for a long time. And then there are other groups like women in business who fall within the broader SME book, but they face certain structural inhibitions for them from success. And so when we open those up and we see these businesses growing in revenue, growing in size, employing more people, that's really the joy for us. Okay. So obviously we are a profit-making institution. So when we see you repaying your facilities and whatnot, we are happy. But the real intention here is to see these businesses that we are supporting do more, to create more jobs, to get bigger in sizes, because then it says that they are really contributing more and better to our economy. From a climate and the green side, again, it starts from the access. So the moment you put an application on the table, we go to great lengths at evaluating what are the specs of the project you're doing, what are the specs of the different infrastructures and equipment you're going to be using. How can we account for the environmental gain that this would do. So we do that before we give you the money, right? Okay. So that by the time we're giving you the money, then we understand exactly what the money is going for. Environmental and social considerations are very deeply ingrained in our credit evaluation processes today. Okay. And we apply a threshold format. So how we evaluate a corporate looking for 30 billion shillings is not how we evaluate Eric who is looking for 1 million shillings. Yeah. So it's these things, setting in place the right parameters and structures to ensure that we are able to follow through. And as you can imagine, once you've given your facility, then as we are following up on how you're doing, the extent of the development of whatever projects you're getting into, then we are also evaluating the environmental and social impacts of your projects.
Okay. Yeah. Okay, good. Speaking of the vulnerability side of things, you mentioned in the report that you've been using geo-reference tools to assess the climate vulnerability, and then of the assets and the collaterals.
Yeah.
How does this tech-driven approach translate into tangible risk management for you as a bank and the clients? And what will you say are the implications of lending policies in a climate-sensitive economy like, say, Kenya, for example?
Yeah, so this has been one of the most exciting things that we've been doing of late from a perspective of evolving our risk frameworks to begin to acknowledge and respond, to climate as a big risk. And so there are a couple of things that need to happen. And I think the first one is to understand what the risk is. So if you've been to Naivasha of late, you might have found the lake has reclaimed a lot of land. So suppose you had financed a hotel, a new built hotel in Mombasa, and then 80% of its rooms are submerged in the lake, and you already gave them financing of, say, 6 billion, right? How are you going to recoup that funding?
Difficult.
So it's going to be difficult, right? And so as the clients think about it, we have to think about it, right? And so physical risks are specifically what we are talking to here. So, things like flooding, things like drought, things like cyclones in the parts of the world where those happen, and they cause a lot of destruction. So we have to begin to ask yourself as a financial institution, how do I, in the best way possible, preempt possible risks, and prepare, mitigate, and adapt to those. So one of the things that we are doing around that space, therefore, is that. So we've done a bit of scenario mapping, for collateral, that's within our book. Done a bit of stress testing, to see if this happened, then what would this mean? And I think it's a very forward-looking way of doing things. So it's an ongoing journey. We have an internal work stream that works on this on a day-to-day basis. Is led by a chief risk officer to really imagine, what could happen, and if that happened, how would we respond to those? So it's an ongoing conversation.
Okay. My next question is around your goal to achieve net zero by around 2040. What will you say are the primary challenges, in decarbonizing the entire financial institution? It's
2050, right? So we do aim to achieve net zero status by 2050, which is aligned to the global ambition, and also aligned to our group. But you're right, in the 2040 year, and the specific target there is for us to achieve our own operational net zero status by 2040. Let me explain. So we are a financial institution and we fund things, but we also are an organization by ourselves. So we have people, we have machinery, we have vehicles, we have many things that enable us to continue operating. We think we can achieve net zero status on this, which are mainly within scope 1 and a bit of scope 2. And then there is what we call financed emissions, largely covered in scope 3. Financed emissions basically means when I give you a facility, what you're going to do with that facility should concern me. And if, for instance, you're a manufacturing company and I'm funding a new manufacturing line, I need to be able to understand the carbon emissions out of that operations and take, to an extent, accountability for those emissions, because I've enabled it as a financial institution. Now, the operational one is not easy, but it's easier for us to get there, and that's why we are talking about 2040. We have a clear net zero strategy, that looks to what we are buying, how we buy it, how we are building, the kind of power that we are relying on. We just finished a proof of concept where we've solarized 3 branches, that are running 90+% now on solar energy. There is a big investment required to deploy this across the 87 branches that we have. If we did that only, it would go out to a very large extent, in helping us to continually decarbonize. Then there are things like waste management. So you'd see in the report, we talk about we are recycling 94% of all waste that is collected from ABSA. So we work with partners like Taka Solutions, to separate, and recycle and upcycle these things. From a financed emissions perspective, which is where we talk about 2050, I think there is a lot more work that needs to be done within that space. It's a very green space. We've been running a work stream internally, that has about 6 large corporate clients. So this is a place where you have to work on threshold basis, because now you can't subject everybody to that process. It would mean a lot of work, but we are working on a threshold basis. So we've picked some 6 client names, that we've put as a proof of concept to see how we can accurately, track the data from a carbon emissions perspective from facilities that we are giving them. And hopefully, within this project, learn better, put in place, the right carbon accounting structures, so that then once we have better understood, the way to go about this, then we can begin to deploy mitigations around it. And the mitigations around it include such things as discussing what you want to do before you do it. So if you come to us today and you say, give me 10 billion shillings to commission a new manufacturing plant, we'll have a conversation with you that says, what are the specs of this plant? What are the ratings of the equipment you're using? Could you consider doing this instead of this? Those conversations begin to help us there. And then from a neutralization perspective, you've had a big number of trees we are growing, 1.5 million by end of 2024. I think the big question on the table now is how we begin to structure this so that we can begin to gain carbon credits there, and we can hopefully begin to use those to neutralize some of our emissions. So it's a bold ambition, but we think that we have the right strategy in place, and we will continue working with the partners that position themselves within this space to help us get there.
Okay, interesting. Yeah. My next question was actually around the carbon credits, because what I've seen around the world is previously it was, the emitters like airlines, manufacturers who would actually set, some part of their money for emissions. And I've seen a lot of banks of late, I'm sure you've seen probably in the Middle East mostly, getting into that space. Just curious to know from a carbon credit standpoint, what are you doing locally?
So we are looking at it as a very strategic space, to be able to not just do so for ourselves and for our emissions, but to be able to advise clients on it. So when we think about potential expansion places, from an advisory perspective, we think that carbon trading, and the whole carbon ecosystem is a space that many clients would benefit from. You said, right, it's been mainly big manufacturing corporates, airlines, etc., that have been off-taking in the market. But if you think about what we just spoke about, financed emissions, and the kind of regulations that are showing up in different parts of the world, including here in Kenya, to begin to disclose what damage you're doing to the environment is. We think that this is an interesting space that if we position ourselves the right way, we can be in a better place as ABSA, but also potentially support a lot of our clients.
Okay, good. Yeah. On to my last one, which is around your plans to review and strengthen the current 13 sustainability commitments by this year. What have you learned from, the process? And what priorities could emerge in the next phase of this?
We put together 13 commitments in 2020. It was a first published sustainability strategy in the market. It was a 5-year strategy. As you say rightly, covered 13 commitments across the areas of environment, social, financing, as well as governance. Very pleased to say we've made great progress across all of them. And we can firmly say we are green on all of them, right? As I've said, it was a 5-year strategy. So we are busy now defining what our next 5 years will look like. There may be fewer commitments than 13, so that's one of the lessons, in that we can concretize, what we want to really focus on based on our materiality assessment. As we plan that, a lot of engagement has happened with stakeholders, with customers, with regulators, to kind of just understand what are most pressing needs, and then self-evaluation to see where are we best placed to make significant impact. So when we think about the next 5 years, today Abdi spoke about 5 or so areas that we have earmarked and said these are places that we will double click to see how better we can do. So you spoke about net zero, which we've spoken about here, achieving net zero status. Climate finance, which we've also spoken about here. There is that goal around achieving a certain percent, 30% by 2035. Deepening financial inclusion, in a country like ours, there is lots of work that still have got to be done, to rope in a lot more people into the financially included, bracket, and so that they are better empowered to produce and contribute to the economy. Then we've got governance. Governance as a big focus for us. We are a financial institution. Our license to operate is trust. That we've been here 100 years speaks to how seriously we take governance, and that will always be a point of focus for us. That's at least one that I can tell you will always be there, as we look into the future. And we're not just looking at governance from a compliance perspective. We are looking at it from a best practice perspective. Where can we lead, the market and industry into how are we running our processes internally? How do we continue investing in our people, systems, and processes to ensure that the right thing is done the right way at all times? And then finally is the ABSA Kenya Foundation, which we launched in October last year, with a bold strategy that has got 4 pillars. Entrepreneurship is the biggest and the primary focus for us. Education and skills is a second priority, specifically designed to help the youth, develop better and begin to contribute economically. Third one is natural resource management, which speaks to the environment and how we are responding to it. And then lastly is health and humanitarian relief, to say, how do we help our customers and our communities to be holistically, sustainably living and developing. So it's an exciting future. We see, great outcomes potentially coming as we continue to do our best at ABSA, but also as we work with partners. This is the one area of business that we are very clear on. We don't compete on, we collaborate on. So you'll see things we are doing with industry peers, with what should be competitors. But for this space, urgent intervention is needed. It's just today that we spoke about progress for SDGs only at 15%. So, we can't sit on our laurels. There's lots of work to be done.
Okay, good. Thanks a lot, Charles, for making time.
Thank you very much.
Enjoy the conversation.
Thank you very much.
Good.